Chris Skinner, CEO of banking industry research firm Balatro. Chris, good to see you. Thanks very much for coming in. So your expectations from earnings, Europe's big investment banks, you anticipating cost cuts? You know, David was talking about declining trading revenues there. Is that the sort of thing you're expecting?
Yeah, I mean, most of Europe's banks had a difficult first quarter, particularly the investment banks, and the second quarter has been even worse, particularly for fixed income trading. So Credit Suisse, we expect to have the worst results with about a 41% downturn on fixed income revenues. But equally, UBS has announced they've had a very difficult quarter. It's looking at about 5,000 job cuts. You see the same with Barcap, and most of the investment trading rooms have had a really hard time.
And you mentioned the job cuts there. Whereabouts do you think, which divisions might they be concentrated in for UBS and Barclays?
Well, it's anywhere where the banks have been trading cautiously in terms of trading in fixed income and avoiding equities, turbulent markets, for example. So those core trading rooms, which traditionally have been the engine of growth and profit, the last two quarters have been bad, and the last quarter in particular, like, as we saw with the American banks, has been particularly bad. So I'd imagine a 25% downturn on revenues as an average for most of the large banks, and a 50% downturn in profit.
And I mean, I'm just wondering how soon they might recover from this. When can we expect those revenues to pick up? Next quarter or the one after that?
Well, the third quarter is always going to be quiet. You're not going to see huge amounts of M&A, you're not going to see huge amounts of trading, equities trading. Treasury markets and bonds is actually really dodgy right now, what with the European issues and crisis, and equally the American crisis doesn't help. So all in all, the conditions are pretty bleak for the banking trading rooms and for the overall engine of investments. Having said that, for the retail banks, maybe that's a better sign, but then you have to look at, for example, AIB this morning reporting a €2.6 billion loss, and their lending book is not looking great. Most of the lending books across Europe are not looking great, so it's not looking rosy on any front right now.
So expect further write-downs?
I think so. I think overall, you know, obviously the big questions around the southern European markets, the ones that are in the crisis, Portugal, Italy, Greece, Spain. Having said that, it's been quite interesting. When the European stress test came out, the Nordic banks came out very well. In fact, they took note that they could have doubled the stress impact and still survive quite happily without any core Tier 1 capital issues.
Yeah, I mean, a lot of the people, well, some of the people I've been speaking to have said actually when it comes to investing in banks, it's the Nordic banks are looking pretty good right now. So I guess the earnings results are reflective of that.
Yeah, and we see this north-south European divide, which is that southern Europe's now in a very soft Eurozone, potentially with Greece, as we just talked about before, still having a crisis and maybe a third bailout on the horizon in the future. You've got the Nordic banks, therefore, in a very strong position with this hard northern European zone, which is the one that I'm focused upon.
So we can expect money to continue flowing in their direction?
I think so, and also the Netherlands banks are strong too. So the northern European banks strong, the southern European banks weak, and it'll be interesting to see what that means to the Eurozone and the longer-term picture as the rest of the year trades out.
And what about the write-downs on Greek sovereign debt holdings? Just tell me about that again. What are you expecting banks to reveal? How bad could this be?
Well, we're looking at something like €54 billion that are needed for Greece in the bailout deal that was done, and 90% of the banks would normally sign up for that sort of level of agreement. Having said that, some of the large banks haven't right now. I mean, you've got 9% of the total Greek sovereign debt with the German banks, 8% with the French banks. But interestingly, one of the banks that hasn't signed up yet is Royal Bank of Scotland, who have €1.2 billion invested in sovereign debt in Greece, and therefore, you know, there's quite a few of the large stakeholders, one of the largest stakeholders of the banking community, saying we're waiting for a little while just to see if we really want to get into this risk.
And, I mean, it's not just Greece, is it? I mean, still a great deal of uncertainty about the other weaker Eurozone economies. What does this mean for the big banks in Europe? Not even the sort of smaller regional banks, but the big banks in Europe going forward, when you combine it with the uncertainty over regulation and the strengthening of balance sheets?
Yeah, I mean, you've got something like €98 billion in Greece sovereign debt. You've got something like €55 billion in Ireland. You've got 48 billion, I think, in Portugal. Two-thirds of that is typically owned domestically, so a third is with the overseas banks. And JP Morgan, I think, did some testing following the EBA stress test results, saying that of the 27 largest European banks, 20 would need to raise a further up to €80 billion to shore up their balance sheets for the exposure in sovereign debt across Europe. So that's quite a sizable amount to raise. And we're seeing right now, for example, Bank of Ireland are trying to get a rights issue off the ground, and they're failing. You know, the government's going to have to take that over, and therefore Bank of Ireland will go from being non-state-owned to being probably around 65% state-owned in the next week.
There you go. Thank you very much indeed. Really good to get your thoughts on this. Chris Skinner, CEO of Balatro. Thank you very much.